Welcome to the Mad Loans First Home Buyer Workshop.
Woo!
My name's George and I got the whole Mad team here behind me and we're all excited. Guys, I'm excited. We're all here tonight. We stayed up late just so you can zoom in and watch our First Home Buyer Workshop. We've all put a lot of effort into it. And Mad is not a one-man band. We've got this beautiful team behind us. We've got credit analysts, we've got director of first impressions, we have financial planners, we've got marketing people, we've got everyone here tonight because we're all part of the process. And our job is to help you buy a property, make it fun, make it a good experience and stress-free. So let's talk about what our agenda is tonight, eh? So tonight we're going to talk about how banks assess how much money you can afford. So how much can I afford? Is it just on how much income I earn, or is it got other things? The bank looks at my bank accounts, I've heard. We're going to talk about MAD versus banks. What's the difference between going to a broker or going to a bank? Wouldn't I get a better deal going direct? Credit ratings. What is a credit rating? Buying associated costs. So we're going to go through all the different things when you buy a property, all the different people you need to talk to, lawyers, building and pest inspectors, all this different stuff. We're going to go through the first homeowner grant, all the different agendas and the different gifts that the government is giving us as first home buyers. How much deposit you need, lender's mortgage insurance, guarantor loans, rates, fixed, variable, P&I, interest only. What does all this jargon mean? And then the last thing, houses versus units. So follow me. Now guys, this is a very informal setting as you can see. So any questions you have during the whole first home buyer workshop, just write it in the comments and I'll get to it at the end. So, by the way, we're all presenting this from the Mad Loans office here in Seven Hills. We've got two offices, Seven Hills and Aspley. Here we've got a couple of credit analysts just sitting here at 7 o'clock at night, drinking coffee, eating avocado. Mate, that looks soggy as. So we've got Josh, Arthur, Nick. Guys, thank you for being part of the set tonight. So what we're here is, I'm going to talk about step one, how the banks work out your borrowing capacity. So the reason we've got Uber Eats here, and I think we've got some Pizza Hut out there. So I want to just show you why is all this stuff here, right? Number one, the more money you spend, the less you can borrow. So even if you make $1 million a year, but your expenses are $958,000 a year, I can't get you much lending. So it's all relative. If I make 100 grand a year, but I spend 95 grand a year with expensive cars, personal loans, I go to expensive restaurants all the time. It's hard to get a loan. The bank will go through 3 months of your bank statements, work out how much you're spending, and of course, take that into consideration how much money they borrow you. It's not just on your income. So guys, what are we going to do? We're going to stop ordering Uber Eats and drinking soy caramel latte and avocado toast? Just make it at home. No, these are all good boys. They don't spend much. But if you do spend a lot of money, I have got Matthew Prentice here. Matthew?
George?
How are you?
Very well.
No, you're just standing there, perfect timing.
Waiting around.
Matthew is our senior financial planner here at Mad Life. And Matt, how can you help these guys out? What do you do in the business?
We can help. If saving isn't something that you do well or you know how to do, definitely start with a basic budget. We do those really well for our first home buyers, just to help them get on track to get to where they need to be.
And what about when you buy a house? When do you slot in the process after that?
We come in later on. So you get the house, find the place you want to live in, then we'll talk about protection. So it's important and it's easy to get to the savings point with the help of a MAD budget. Then it's important to keep it. So making sure you're okay if you can't work, fall sick, that sort of thing.
So your loan protection, life, trauma, TPD,
income
protection. So if something was to happen, because traditionally all our customers are usually two people, two partners, right? And I need both their incomes to get a loan.
Yep.
So if one goes missing, something happens, we're in trouble.
Yep.
So that's why I need to talk to this guy. And then later on, fast forward a few years, then you start helping people with
other things. So you're going to go up, you're going to have kids, we can talk about saving for education, super, make sure you retire well, buy another property, that sort of thing. It starts with talking to us firstly, starts with budget.
So you're going to make sure we're all retire well, mate.
Everybody will.
Thank you, Matty. Appreciate it, mate. All right, guys. Next, I'm going to show you, I'll show you Mad Zone. Follow me. So this is, we work hard, but we play hard at Mad. So we got Daytona machines, we've got the point blank gun machines. If you can beat me on Daytona, I'll give you $100 as a challenge. All right, I've played that game way too many times. Daytona, follow me. So now we're going to talk about, so what is this fantastic service? Thank you, Tia, Director of First Impressions. Now we're going to talk about banks versus mortgage brokers. Oh my, guys, break it up, break it up. We're all friends here. How are you, mate?
Good to see you.
How are you? You good?
George?
Good.
How we go?
So guys, we're all friends here, right? We've got the banks, and mate, thank you. You put me through apprenticeship. Well, thank you very much for that. Okay? And did you know that most brokers worked at banks? So thank you, bank. And brokers, thank you for being there, mate.
My pleasure.
Why I have these two people here is
Two tall people.
I want to look at this beautiful slide, guys. Mad versus brokers. So I want to talk about going direct or going through a broker. Like, what is the benefit? What do brokers even do? Firstly, I want to ask a question. Number one, mate, do you charge for your service?
No charge for our clients.
Oh, fantastic. All right, second question, mate. If I look you in the eyes like this right now, and I ask you, is this the cheapest deal in Australia? What are you going to say to me?
Technically, no.
Look, a bank can't possibly tell you that's the best in Australia because they've only got one product. But if I ask the same question to you, mate?
Multiple banks, multiple products, multiple policies, multiple valuations. So it's multiple options.
He got excited. He's excited. He's excited. The broker's excited. So Costa's right. He's touched on heaps of different things. So not only can Costa most likely get me the best deal because the guy's got all the different banks at his disposal. He mentioned something about, for example, what are we going to say again?
Policy.
Policy. That's right. Sorry, it's late at night. Policy. So policies. What does that mean, mate? If I've been casual for 2 weeks, can you give me a loan?
Sorry, it doesn't fit our policy.
Mate, this bank's not doing nothing. What are you, mate? Can you help me out?
It does fit our policy. Multiple banks will actually look at that.
So you can. So what are you trying to say?
All.
Not all banks do it, but all banks have different policies. So if I've been self-employed for 1 year, this bank may say, nah, can't help you. But Costa,
We'll look at 12 months.
oh, not bad. Pretty good, mate. What if I write a loan with you, mate? Are you going to call me every day? Are you going to ever talk to me again if I come through you?
Not really, no. Just a bit of junk mail, just a bit of spam. It's better.
Probably giving me a credit card increase.
Credit card in 2 years.
True.
Yeah.
What are you, mate? What do you do? If I come through you?
Annual home loan reviews, looking at repricing, revaluing, touching base with our clients. Circumstances always changing. So
what are you saying? If I see you every year, you're going to get me a better deal every year?
absolutely, reprice. You become officially part of the Mad family. So we'll look after you. It's an ongoing relationship.
So guys, banks versus brokers. Banks have got one product, one policy, but we're friends with them. We love each other. They're all there, and they all have a little purpose. Some banks love this type of business. Some banks love this type of business. And brokers, our job is to find the right bank for the right client. It's almost another little analogy is like walking into Holden and saying, listen, is this the best utility in the market? They're not going to say, yeah, 100%. But they're not going to tell you that the Toyota Hilux is a way better car. True? It's the same analogy. All right, guys, I'll let you guys get back to fighting around. Thank you for coming in.
Thank you.
So banks versus brokers. Now we're going to talk about credit ratings. Most of you got no idea probably what a credit rating is because you're a first-time buyer, but we all have one. It all started when we've opened up our first phone bill with Vodafone, or we had our first, we started renting and we started paying electricity. Now, if you paid it on time, you've got nothing to worry about. These are our two credit reporting agencies in Australia, Equifax and Dun & Bradstreet. I'm going to show you what it looks like. This is not a real credit report, of course, but this is sort of shows you what they are. So, credit file. The higher the number, the better. If you've never done a credit check on yourself, give us a call. We'll do a free credit report for you. So, a few things that it goes for. Obviously, you don't want to have any of these, or definitely none of these. So a default is when you had, for example, a credit card with Citibank from 5 years ago and you just never paid it. You moved houses, you're living with your mates, you went overseas for a few years, and you think that Citibank forgot about it. Unfortunately, they didn't, and they put a default on your name. And it's very difficult to get a loan when you have a default. So if you think that you have ever not paid a bill, no matter how small it was, the most common one being telecommunications, get in touch. You're not doomed forever. You can fix it. But you want to look out for defaults on your credit report, bankruptcies. I think you would know if you've been bankrupt. I don't think any of you would have been. Credit inquiries. So if you guys are applying for Zip Pay, Afterpay, heaps of credit cards, actually works really against you. Directorship, that's if you've got a company, and conduct. So since positive credit reporting came out, if you do have a credit card with NAB and it was really bad conduct and you think that I'm going to apply through Commonwealth Bank for a mortgage, they won't know about my bad conduct with NAB. They all do now. They all share each other's information and how you pay as a customer. So moral of the story, always pay your bills on time. And you're not doomed forever if you haven't, but get in touch, we'll do a free credit report for you. The higher the number, the better it is for you. Alrighty, next one. I'm going to do a real scenario for you. I'm going to ask, is a broker around here somewhere? Broker. Here we go, there's a broker. Thanks, mate. Mate, thank God you're here.
I'm never usually late.
Alrighty, so I'm going to do a real life scenario pretending that we just bought Mr. Broker property for
$700K.
let's do $700K.
Congratulations.
Congratulations. So this is, if you're really sitting in my office right now, this is what I'll be doing with you. Be sitting here where this beautiful broker is, and we'll be sitting here showing you what it all looks like. So number one, I'm going to pull out my phone, all right, because I want to pull up the Mad Loans app. It's pretty sick. Little zoom up, little soft plug. It's got free property reports, but the reason I'm using it right now is stamp duty calculator. So let's pretend we bought something in Queensland for $700,000 to live in. The stamp duty is going to be $19,480. It's not very fair, is it? All right, so conveyancing, generally about $1,600. So we need a lawyer. If you're a client of ours, we usually refer them to who we're using at the moment.
John Dracos.
John Dracos. We've got Grasso Sales Romano sometimes. We've got Empire Legal. We have a few different people who we refer to for conveyancing. They're approximately $1,600. So I'm going to go through all the buying associated fees now, so there's no surprises. Building and pest, they're about $650. Is it the same price? I've been saying the same number for quite a while now. Building and
Up to 7.
Sorry, Andrew, if you're watching this. Sorry.
Testing is our building pest inspector.
He's really good here in Queensland.
Yeah.
So they're $650. Why do you need a building and pest inspector? You want to make sure that the downlights are widened properly, or the power points are earthed correctly, or the hot water system's not broken, or you want to check if there's termites is a massive one, or if the deck is about to fall down or something like that.
No structural issues.
So you want to do it. Often you can even negotiate. Once you get a building and pest report back, if it shows some serious stuff that you didn't know about, again, you're a first home buyer, so you didn't know what to do, give us a call, we'll step you through it. But sometimes you can get 10 grand off or 20 grand off your house price because...
Or pull out of the contract.
Or pull out. If it's too much work, pull out. That's why you buy subject to building and pest.
Yeah.
All right, rates. Welcome to property ownership. And water. So rates is for your bin collection, water is for your sewage. Flush those toilets. Every 3 months you've got to pay this sort of stuff here in Queensland. And then insurance. Before you settle your loan, so you buy it on today and it settles traditionally 30 days later, you've got to get building insurance so the bank won't settle without it.
And that needs to be done from day one. As soon as that contract's dated, you're liable for any damages to the property.
That's true. Alrighty.
In Queensland.
In Queensland. So if you're watching from other states,
It works
a bit different. All right. All right. So bank fees. I mean, look, how long's a piece of string, mate? Honestly, how long is it? That's a trick question. That's a trick question. General 5 cents. No. Okay, so bank fees is usually $200. So it's so competitive at the moment. Banks are waiving application fees. They're waiving a val. When the bank does a valuation, they will pay for it because it's so competitive, which is beautiful because there's so many different banks out there. But they usually have a cheeky $200 settlement fee. So I'm going to put here $200. Removalist. Every first home buyer I've done a loan for, they always say, I'll do it. So true. I'm going to work on 90% of the time. And body corporate, I'm not going to say we bought a unit this time. So mate, what does it all add up to? Well, mate, jeez.
25,000.
All right, 25 grand.
25K worth.
Mate, you're like Rain Man. You worked that out so quick. Thank you. All right.
700 plus 25.
What does that equal, mate?
725. Quick maths.
Thank you very much. So 725. So I bought a property for 700,000. 25 grand adds up pretty quick, doesn't it? So I need 725 grand to buy this property. I'm going to show you now the maximum loan that you can get at the moment. So I'm going to teach you about LMI. What's the maximum I can get for this property?
560, which is 80%.
Okay, so ideally, the bank wants an 80% loan to avoid paying lender's mortgage insurance. So I need 725, 560 the loan. How much do I need to put in, mate?
165.
Holy, 165 grand. Mate, how am I supposed to save 165 grand? Soy caramel latte, piccolo, avocado on toast. You know that I can't afford this. So what's my other option?
You can pay lender's mortgage insurance.
All right, so what is the max loan if, have we worked out here? No, yeah. It's all right. So I've worked out, so step one here, all banks do 80% with no lender's mortgage insurance, but you need heaps of deposit. Unless if you're watching, you're a doctor or an accountant, or you're like a special industry where some banks borrow you up to 90% of LMI. Again, if you're wondering if you fit that box, give us a call and we'll see. Sorry guys, good idea with the water.
There we go. So 90%, that's a sweet spot.
So 90%. So loan 630. Yeah? So what does that make my deposit? 95 grand. How much would LMI be? So that's borrowing 90%.
So 90%, as soon as you step just above that, lender's mortgage insurance generally jumps up by quite a bit, 5 to 10K. So that's the sweet spot. So the lender's mortgage insurance on that would be $17,059.
So that LMI gets put on top of the loan. So your loan would end up being $647,059. So it's called capitalized. So that's an option, borrowing 90% of the value of the property, which is 630. All right. So I bought it for 700. The fees was 25. I need 725. That means I need a 95 grand deposit. That's still a lot, Costa. That's still a lot. So what is the max loan? Or is that enough about LMI?
Just to give you a bit of an idea, if you increase your loan by $1,000, the lender's mortgage insurance jumps up to
24 grand from 17. So 90% is a sweet spot.
90% is a sweet spot.
So moral of the story, Costa, you're the advisor, you're the professional, and I'm guided by you. So that's what you want to go to a broker for, is to teach you these different things. Now, I'm going to teach you, so we understand LMI. LMI doesn't actually, in fact, protect you. It protects the bank. Bank's sitting out there still. Have a look. Bank. So LMI doesn't protect LMI doesn't protect us, the broker, or you, the client. It protects the bank.
That's right.
So if you run away to Mykonos and never come back as a client, and the bank sells it, if they lose money, LMI is going to pay the bank. True?
Yep.
So it's an insurance. It doesn't really protect me personally. All right. Mate, I'm going to talk about guarantor loans, guys, and I write heaps of guarantor loans. I'd probably call ourselves guarantor specialist. We buy a house for 700, the fees are 25, so I need 725 grand.
So your total cost including fees, still exactly the same, doesn't change.
Deposit, none. No money, no savings. So I want a loan of 725, man, that's more than 100%. All right, so, and I still pay no LMI. How does that work? All right, let me teach you.
So borrowing 100% plus fees.
This is how most first home buyers get into their first house. I'm going to unhypocritically say I had a guarantor loan. Costa?
I did as well.
We did as well. So a guarantor loan is a beautiful way to get in the market. Even if you have 20,000, 50,000 or 100,000, it's still a good way to avoid paying that lender's mortgage insurance.
If you just want to come closer, you can come.
So what we do is we do two loans, because I don't want the guarantor to guarantee this full amount. All right. Now, firstly, you might be thinking, what is a guarantor? What is a guarantor? This is what guarantors look like.
Hello, George.
Oh, man, thanks for coming in.
Nice to meet you.
You guys look you look fantastic today.
Thank you.
So a guarantor has to be a parent or a sibling or a grandparent. So what I want to do is teach you guys what going guarantor means. Now, if you're watching this and you're a parent, or you're a first-time buyer wondering about guarantor loans, this is the conversation. We got nice glasses, love them. Harry Potter, it looks nice, good movie. So, your son or daughter wants to buy their property, and they want to buy for 700 grand. Now we know they haven't got that much savings. It's hard to save these days, so they need 25 grand of fees. 725 is what we're after. Now I would never ask you guys to guarantor that. It's too much money. True. So in fact, this is the way we structure it, guys. 700 grand times 80%, loan A is going to be $560,000. All right, that happens to be exactly 80% of the value of the property the kids are buying. That's how much they need. That's how much I've given them in their own loan. Now, but they need 725. So I need to create a second loan, which is $165,000. All right. Now this loan here is the one which you will be going limited guarantor for. So you won't be guaranteeing this amount, it's this amount. Now, the risks of guarantor. I'll tell you the worst case scenario. So let's say, what's your son's name again?
Jonathan.
Jonathan, good name. All right. Let's say Jonathan comes, gets a loan with us, and then he finds a new partner, and they move to Greece. They find Mykonos. They think it's a beautiful place, and they never come back. And Jonathan forgets about all his obligations here in Australia. And the bank's ringing me, George, where's Jonathan? And I ring you and you don't know where Jonathan is. You think he's in Mykonos, Tropicana, just partying away. And the bank sells the property and they lose money. Now, mind you, this very rarely happens, but this is the worst case scenario. Let's say Jonathan bought a lemon property and the property is now only worth $300,000. The bank lost all this money. The most they can ever come after you for is $165,000. So it's a limited guarantee. You don't guarantee this much money. Obviously, we never want that to happen. So I have to ask you a couple of questions individually, generally with the guarantors. I ask you, would you have to sell your house if we asked you to borrow 165 grand? We ask you, could you afford to pay the 165 grand if you needed to? Are you under any pressure to do this? Is that Jonathan over there with a gun behind you? Sorry, Jonathan, go away, mate. So that's a guarantor. The benefit of guarantor though is Jonathan gets to buy and not pay any lender's mortgage insurance. And you have to understand, it's a limited guarantee. Does that make sense?
Excuse me, George. How long are we guarantor for?
Great question, mate. Well, look, this is a 30-year loan. And we're probably going to do principal and interest. They're going to pay off the loan. The other option is interest only, which we're obviously not going to do. Because it's a 30-year loan, if Jonathan just makes the minimum payments and the property doesn't change value at all, it could be there for 30 years, mate. But if Jonathan bought in a good suburb and the value of the property went up a little bit and Jonathan was really hammering down the loan and it hit 80%, I would discharge you as a guarantor. And traditionally, it could take anywhere from 1 to 6 years. Depends on what the kids buy. What other questions you got?
So how can they pay it down faster if it's fixed?
Well, good question, parent number 2. So what I usually do is we usually make this loan variable. Because again, I've got all first home buyers here watching live as well across Australia. Variable means you can pay the loan off as fast as possible. So if I do pay it off faster, the extra payments the kids make, they don't pay interest on. If they need the money back, they can redraw it. So I want them to have a loan which they can pay it off faster and even have offset accounts on. And I usually fix this big one. And let's just say I fix it at 1.99%. And I usually make it variable at, let's say, 2.8%. But the reason I want variable is I want the kids to have the ability to pay it off faster, so I can try and get rid of you guys. And I also want the kids to have offset accounts. On that, let's talk about offset accounts. So, let's say the guarantor loan was $120,000. Remember, I said that it was variable. And the reason I want it variable is because I want you to pay it off. I want the kids to pay it off faster. I like making the guarantor variable because some banks give you multiple offset accounts. So let's say the kids are here, getting paid. You can probably zoom in on this one if you want. Getting paid into their main account. And then they might have a savings account and a bills account. And all these accounts here will all 100% offset that guarantor loan. So if the kids had got $20,000 sitting in these accounts, they would only get charged interest on 100. Whatever is sitting in here offsets your loan. Our goal is to remove you guys as guarantor as soon as possible. So,
George, is there any preventions? What if something was to happen to one of the children and they could no longer work? Is there anything we can help put in place for them?
Usually at MAD, we make especially the kids speak to MAD Life over there, and that's when they get things like loan protection, income protection, life insurance, trauma, TPD. So if something was unforeseen was to happen, make sure they're all protected. So that's, you guys saw earlier before, Maddie talking about loan protection, something to make the guarantors feel better. And when I say guarantors, I mean parents. We want to make sure the kids get, be an adult, they're about to ask for a loan, you want to have some insurance in place. So that's pretty much how a guarantor loan works. And the benefits are they can borrow 100% plus fees. You don't pay any lender's mortgage insurance. You get really good interest rates because the bank sees it as an 80% loan. Happy with that?
Great.
Sounds good?
Let's do it. Let's get Jonathan a house.
Thanks, man.
Thank you,
Thanks,
George.
Mum. Thanks, Dad. Thanks for coming in. All right, gang, now we're on government grants. Now, you can probably tell I'm wearing a different shirt and look a couple of years older. Well, that's because I am. But I want to keep you guys up to date, so I've done a new slide just for you guys because the grants changed often. First things first, first home loan concession. Now, this is for Queensland. For those watching in different states, in our description below, click the link because all the different states have different grants and different concessions, and I want you to make sure you're eligible for what you're eligible for. Back to first home concession. In Queensland, under 500 grand, no stamp duty. 500 to 550, it's a bit cheaper than if I was to buy. So it's a bit cheaper. And then 550 and above, it's the same as if you buy your second property. Now that one there saves you about $9,000 in stamp duty if you buy it 500 grand. Pretty good. Next is the first homeowner grant. FOG, we call it. This is, you get $15,000 free if you buy a brand new unit, brand new townhouse, or you build a brand new property. Now there's quite a lot of T's and C's with this one. To list a couple of them off, the max value of the completed property must be $750,000. Now a lot of banks can use this as part of your deposit, and we can actually apply for it for you when we're getting your finance. The last one is why I reckon, gang, the best one I've seen in my whole career. The first home guarantee. This one allows you to borrow up to 95% and pay no lender's mortgage insurance. This, I've done some numbers and I'll show you soon, can save you up to $32,000. There's a lot of T's and C's in this one though. Can't spend any more than $700,000. Now, it's different state to state, and I'll show you how to find exactly where you want to buy, how much that number can change. It could be 650, could be 600. Your combined income must be under 200 grand for a couple, or if you're individually applying, 125,000. One of the big things here is you must be an Aussie citizen. So as you guys can see here, let's just look at the NAB one for argument's sake. If you borrowed 95% on a 700 grand purchase, that would be a loan of 665. Now let's just zoom up here on ANZ. That's a saving of about $31,000 in lender's mortgage insurance. So as you guys can see, there's so much money on the table here. You've got to go to a professional who knows all the government grants for you. So if you want to buy property in Australia, watch this video because there's up to $32,000 in saving by knowing your government grants, which you're eligible for by being an Aussie citizen. Okay, gang, so here is how to find exactly the price caps for the suburbs you want to buy in. Again, it is in the description below. Now, for argument's sake, if we buy in Coorparoo, the price cap is going to be 700,000. Now that's because it is a capital city. So in Queensland, the max cap is 700K, but for the rest of our state, it's about 550. For those people, for example, in Gatton is 550. But New South Wales, their max cap is 900K, and Victoria is 800K. So that means you guys can buy up to 900 grand as a first home buyer and get in with a 5% deposit and waiving LMI. Pretty cool. Check it out, get on it. Alrighty, so guys, we're nearly getting there. We're nearly at the end, and I thank you for watching this. Hopefully you're learning some stuff. I know it's, we're being a bit fun with it, but buying a house isn't the most exciting thing. I mean, it is exciting, but coming to someone for a loan isn't exciting, so we'll try and make it fun here at MAD. If you do come to MAD, by the way, MAD umbrellas. So, the last thing I want to talk about, look at all these crazy guys up there. You guys are eating pizza. I'll come eat some pizza in a minute. The last thing I want to talk about is property. So I'm not a real estate agent. I'm not affiliated with, I'm not going to try and make you buy something. I just want to tell you my own experience, which might help you as a first home buyer, because especially with those grants up there, they sort of make you think, should I be buying land and building to try and get this money? And is that necessarily the best thing to do or not? I'll let you make the decision after you watch these slides. So What to buy? House versus unit. As a first home buyer, I remember very well. Should I buy a house or should I buy a unit? So what did I do? Young George, I bought a unit. That's Brisbane City. This was my veranda. This was Kangaroo Point. I had a nice kitchen area. It was 2 stories, 3 bedrooms, 2 bathrooms in Kangaroo Point, which is a really good suburb of Brisbane. But it was a unit. I bought it in 2010. I paid $515 for it. Bought it from a really good real estate agent, Soren. He's also a good friend of mine. There was about 10 grand to freeze. I did get a government grant of I think 7 grand back then it was. I did a bit of a reno on it. My brother and I, my brother's a Sparky, we redid the lights, I retiled it, I did the carpet, I changed the doors, I put aircon in, I even had electric blinds, I loved the place. Excuse me. I had it for 8 years. I sold it for $520 minus commission, marketing, staging furniture. I lost $59,000. Wasn't the smartest decision of my life, but I want to show you because doing this industry for so long, I've done so many loans, and I've really never really seen anyone who buys a unit and makes money. So I like to show people this. Then, I bought a house in Camp Hill. Now this house I bought in January 2017 for $555, and there was about 25 grand of fees. I did a bit of a renovation on it. I was learning from my customers. My customers, without even intentionally doing it, I was seeing other people buy property, do some small things to it, and then I was seeing them the next year for their loan review, like the broker said earlier, when I was reviewing their rates and revaluing their property. Their houses kept going up and up and up, and my unit kept going down, down, down. So what did I do? Started doing the same. And I just sold it, March 2021. By the way, this is what it looked like after my renovation. I sold it for $915. That's up, I think it's $250,000 or something like that. So not bad. I don't do this to try and look cool. I'm doing this to try and show you guys houses versus units. And then I did the same thing with a Coopero house. I bought it for $650, did a renovation, and then I got it $990. So anyway, that's just my little story about property and how I bought units. I didn't buy one unit, I bought 2, and I lost money on both of them. And then I saw my customers making money on houses, and then I started doing the same, and I've also done not too bad. So houses versus units, have a bit of a think about it. Realestate.com's got a beautiful little feature. If you go research suburbs, and you can go down, change it to yearly, and you can go back a decade, and it actually shows you with a graph the history. And houses generally always have been going up, and units sort of stay the same. So do yourself some research and find out. Now, guys, I can't remember, I think we might be wrapping this up now. So we've talked about pretty much everything we wanted to. Buying your first house, you know, deposits, LMI, guarantors, rates. We went over fixed, we went over P&I. Hopefully you guys took some things out of today. Remember, Mad Loans is here to try and make buying your house fun and easy. And after Mad Loans, you're going to talk to Mad Life. Matty over here still walking around, still hanging around, mate.
Still here.
So guys, thank you very much for watching the First Home Buyer Workshop. I'm going to stick around to answer all those questions you asked during this workshop. Besides that, Matt, you just bought your first house recently.
I did.
So, mate, tell these guys some stuff.
So, same hand up, I also use the guarantor option. But
Yep.
I think if people come and see you, not everybody's always ready. So I think where we can help, if you're not ready, we can help with a budget to get you there.
Yep.
If you are ready, we can help you build that savings back up that you've just used. Or if you do use the guarantor like I did, we can help you pay down that variable loan a little bit quicker, help with the structure, the offsets, all that sort of thing. Works beautifully together. So
Yep.
budget starts with everything, and then the loan protection. You want to do the right
Yep.
thing, particularly with guarantors, protect you, protect your family.
Yep.
They put themselves out there, make sure you do the right thing, protect
Yep.
them.
Yep.
So I think where we'll slot in is towards the end of the process, but coming to see you first.
Yep.
Even if you're not ready, always get in touch first.
I think it's good, exactly. I come in and half my day is seeing new customers like you guys, and the other half is seeing the old customers who I've been seeing for a decade, and I review their loans, make sure they're still cheap. But the new customers, man, they might not be ready for years. You guys might be ready tomorrow, you may be ready in 6 months or 6 years, I don't care. And what my job is, I want to show you exactly where you need to be to help buy your first house. So step one, I reckon, is calling up Mad, booking in an appointment, whether it's on Teams or in person. We'll go through our little process. We'll work out how much you can afford. If you've got bad credit, we'll work with it. If you're lacking savings, we'll work on it. If you don't know if your parents will go guarantor, or you want me to talk to your parents and see if they qualify to go guarantor, come on in. I think it's a beautiful time to get in the market. I think that's about it, mate.
Pretty much. It's not a race. Everyone's different. It's not great to compare yourself to
No.
everyone else that you see is buying houses.
Yep.
Everyone's got a different race, a different story. So it's always best to just come in and have a chat.
Yep. All right, everyone. Hopefully you guys learned some stuff today, and we'll try to make it a bit of fun. Let's go eat some pizza, mate.
So,
Done.